So welcome everyone to our second monthly speaker series. This month we are super grateful to have Gregory Mannarino. Sure, if not all of you, most of you know who Greg is, and maybe you've even read his book. And we are super excited to have Greg here to talk to us today. We have all your questions.
Yeah, and for any new members that may not know, Greg was grateful enough to share his book with us. We can give it to you. It's in the Discord. It's called A Not So Random Walk on Wall Street. It's a great book that really just summarizes how to trade in the markets in a simple way. So if you haven't read that yet, you can reach out to us. We'll send that over to you.
Yeah. So without further ado, welcome Gregory Mannarino. Maybe if you want to give us just, a quick introduction for those members that may not know much about you, how you got into trading and, where you're at now.
Sure. Well, I've been out here for a while. I started this blog, my blog, back after the meltdown because I personally lost a lot of money and it pissed me off. And that's really the truth. And I saw what happened to people, how they got hurt, destroyed, some of them with the housing meltdown. And I just said, I got to start talking about this. So I just came out here and started talking about it. And, I have a background. I started out working for a Wall Street bank many years ago in the late 80s. And so I got a taste of that and I got to see the dark side of it a little bit. And so anyway, I've always been interested in this. So I kept that going since again the meltdown, and I'm out here trying to explain to people what's really going on. And not only just that, what they can do about it. And that's the most important thing. It's not just that, look, there's a lot of people who sit there and spew nonsense out of their mouths, most of it being completely wrong. So what I do is I sit here and I say, okay, this is what's happening and this is what you can do about it. I believe, just from talking to you guys in the pre-interview, you guys are all, men of action. And that's what people need to do. They need to act. We can sit here and we could talk about this stuff and we can, whatever it might be. But if you sit down and do nothing, well, what good does it do you other than just making you maybe stay up at night? This is not what I want. I want people to understand the situation clearly, but then I also want them to make up their own mind. I don't want people to say everything or take everything that I say as like, the law. No, I want them to sit back, evaluate the information that we put out, I put out, maybe you guys put out too, and then, think about it and say, okay, you know what? I think they're right. After doing my own research, I'm going to do this. I'm going to do that. This is a crazy game we're all in. I think we can all agree on that. And it's not for everyone, but for those, what fortune does favor the bold, that's the truth. And, just take action. Don't sit back in this environment and let it go by without doing something. You must act. And opportunity comes up every single day. I mean, that's really what I do. Every day I look at what I'm doing, my portfolio, whatever it might be, and I say, okay, well, what do I need to do? What else should I be looking at to maybe make it work? Because this environment is in many ways, well, it's completely unique. We've never seen this before. So in times of, like this, there's opportunity. And that's really what I want people to understand. They don't have to do nothing. They can do something to help themselves.
Awesome. Yeah.
And we spoke about this a little bit earlier, but could you just kind of tell everyone how you got into trading? Yeah.
Well, my exposure to this was, again, like a lifetime ago, back in the late 80s, after watching the movie Wall Street. I had no idea what I wanted to do with my life. It's really the truth. My parents were like ex-hippies. They never gave me any direction about anything. But my dad knew a lot of people. And so my dad said, hey, Greg, you want me to try to help you get a job? That's really the truth. And I was like, well, sure. So he's like, okay, I have a friend of mine who works over at a bank and maybe he could, help you out. So that bank just happened to be Bear Stearns. So I put on a lousy suit and I went down there and, I instantaneously got hired for what? I don't have any idea what I was going to do. I sat there with the guy, I talked for about, 15 minutes. And I was like, okay, Greg, well, this is what we're going to do. Because he asked me what I wanted to do. And I told him straight out, I have no idea. I was being completely honest. I don't know what I want to do. I don't even know why I'm here, other than the fact that I'm broken, I have no money, and I need to earn some. So that was really the truth. So that's how I got my foot in the door, exposed to some of this whole thing. And I got to see things over there that I think were very unique. I got involved in maybe a few things I shouldn't have got into, but it really allowed me to see what went on behind the scenes a little bit. And I'm very happy. I'm very happy I got to do that. And anyway, that's what got me interested in this whole thing. And only one guy that I worked with over there actually took any interest in me at all. And he was the guy that showed me the ropes. Okay, Greg, this is how trading works. This is what you should be looking at. Basically, I was a scut boy. Basically, I was running around doing nothing for a while. And then then I wanted to quit. I was like, well, this is just terrible. I was an assistant analyst. Meanwhile, I didn't even know what that even was. I'm not going to lie. I didn't know what that was. I'm like, what am I analyzing? Show me, can someone please help me? It was, but anyway, so I was going to quit that position. And then, and I remember the day he's like, well, what if I can get you to do something else? I'm like, well, what are you going to get me to do? He's like, you like talking to people? I'm like, yeah, I like talking to people. He was like, well, how about if I put you on the phone and you'll make phone calls all day? I was like, I'll make phone calls all day. He goes, don't worry about it. We're going to tell you what to do. So that's how I got working on the trading floor. And I had no license. I was working under somebody else, and I started selling securities, and it was just insane because it's illegal, but everybody was doing it. Everybody was doing it. And they probably still are, I guess. I don't know. We're talking about days when this was all done by paper. It wasn't done like today. We're talking 1986 or so, 87 maybe. I don't even remember. But and that's how it started for me. And then me and some people got involved in front running a little bit. I think it's common knowledge. I've already spoken about it. So I mean, we knew what trades were going to be placed because we had the paper in front of us. So we had this little thing going on where we were like, well, just it was a simple way of making money. And anyway, we ended up getting caught, and no one got in trouble because we had, the bank would have gotten a lot of trouble because we had no license. So they kind of brushed it under the rug like they do everything. So that was that whole thing with me. But I'm glad I got the experience. And then I got out of that and I was like, okay, what am I going to do now? And then I went into medicine, and I did medicine for 20 years, while at the same time trading on my own. I always had an interest in the market, and then completely got out of medicine. And now this is all I do is the market. And I think it's been the greatest thing for me ever. So I kind of went, full circle, like where I started from. And that's it. That's my entire story.
Awesome.
So,
Yeah. It's great to see how, mistakes pave the way for success. So it's great to hear that.
So we, a lot of our members are young, either in college, just out of college, looking for careers, and, interested in finance. Could you said, you saw the dark side of all this banking stuff, and you talked about this in your video, but people that aren't familiar, could you just speak about that a little bit?
Well, I mean, with the dark side is I got to see a lot of stuff that went on behind the scenes. I mean, like, a lot of guys, and it wasn't just what was going on at Bear. I mean, we had a network of people in most of the banks on Wall Street that were front running the markets, meaning that we knew what trades were going to be placed. And before they went through, we were jumping in front of the trade. So that made us easy money. I was young, I was stupid, and I thought it was exciting. I'm not going to lie about it. Would I do it today? I don't know. I'd have to think about it. But that was kind of what I was. It's always the same. The game is rigged. The game has always been rigged, and it's always the insiders who make the easy money. And it seems it's a repetitive pattern. I mean, here we were. It was probably a network of maybe, I don't know, maybe there were about 20 of us at the time at different banks. And we hey, you know what, this trade's going to go through, this trade's going to go through, blah, blah, blah. It's a big trade, blah, blah. Okay, what do you want to do? How do you want to play it? Then we had some other guy placing trades for us, in a pooled account. And anyway, so, but like I said, everybody was doing it. It wasn't just this group, there were other groups doing it too. And it's probably still going on with regard to, it's always like that. It's if anyone thinks that like insider trading isn't going on, well, we hear about it all the time in the news, but it's rampant. It's absolutely rampant. It's always been rampant. It's never going to stop. I just happened to be a part of it very long time ago, like I said, and luckily I wasn't licensed at the time, because I could have gotten in a lot of trouble. I ended up just getting fired. Me and a bunch of guys, they're like, okay, guys, you're not working here anymore. And okay. So then that was that. And no one would hire me. I mean, after that, I couldn't get a recommendation of anything. So I ended up having to leave. That's why I got out of it completely. I was like, okay, what am I going to do now? So then I was like, okay, I'm not a stupid guy. I'm going to, get a medical degree. And that's really what I did. So, but with that, that's really the dark side of it all is, there's insider trading. It's going on then. It went on then. It's probably going on now. In fact, I would be willing to bet that it is. And that's the thing. It's hard to stay ahead of the curve when you're a guy out here and you're trying to wade through all of this, betting against professional traders, betting against the insiders. It's kind of difficult. But it can be done, obviously. Look, we're doing it. All of us here are doing it. And it's a beautiful thing to do. And I love the thrill of it, the competition of it. That's really what keeps me coming back, I think, to a large degree. Like, I know if I'm in a trade, there's somebody else on the other side. And who's smarter? Like, who's the one that's going to win? And I'm not going to win all my trades. None of us will. We all know that. Losing trades is part of this game. If you can't accept it, well, then you got to get out and go work at McDonald's or something. But if you can deal with it and realize that this is a long-term game, you can have, I'm sure you all have had a string of losers. We all have that. And it depends on how aggressive you are, what you're trading, of course. I mean, there's a lot of ways to take risk out of this. We were talking about some of this, pre-interview. But, look, with risk, you're always going to suffer a loss from time to time, sometimes big ones, sometimes multiple in a row. But if you sit back and you evaluate it and say, okay, what did I do wrong? Why did this trade go wrong for me? Every time I make a losing trade or it goes against me for whatever reason, I learn something. Till this day, I'll say, okay, why did that go against me? What did I miss? Obviously the markets are very fluid. Things are going to change on a dime. You got earnings coming out, you got this, you got that, economic news. So, you have to obviously factor all that in and then sit back and say, okay, well, did I do anything wrong? Could I have done something different? And even with that, there's still no way to eliminate risk. We're always going to have it. You can move risk around, but you can't eliminate it. In anything you're doing, and no matter whether you're running a strangle, a credit spread, selling, I like to sell things naked, as most of but I trade very, very safely now in my old age, in my swing / day trading stage, which lasted many years. I took some wallops of losses and I also made some incredible gains too. But those swings in your portfolio can really get to you after a while, keeps you up at night. Like if I was in a really risky position, I would think about it all night and I could sleep. And I said, as I got older, I was like, no, I can't do this. So what I did was not even that long ago, really, I started switching up how I'm trading, mostly selling naked positions. And I know a lot of people think there's a lot of risk involved in doing that. And not the way I do it. I'm like 20% out of the money for the most part, maybe 18, 20% out of the money. And I'm going to get out of that position before it goes horribly against me. I'm never going to let it do that. So now I can sleep good at night, trading that way. But and I like what you guys are doing. You're not just buying options, you're kind of setting things like spreads up, like we were talking about in strangles and stuff like. I like that. It's a good way, I think, to honestly get to really know the market. And some of you guys have been at it for quite a long time. And I think that's extremely impressive. I've been at it for a long time too. And I think I've done whatever can be done wrong. I've done it and I've learned something from it. It's really the truth. And I think that's how people learn. You got to make mistakes. You almost have to pray for them, because every time you make a mistake, you learn what not to do. And sometimes even with that, you'll still make the mistake. And maybe you need to have it beat into you 3 or 4 times before you realize, you know what, that was not such a good idea. Maybe I won't do it again. And maybe you even still will, but at least, it's a learning process. And that's what this is. And that's why it's fabulous to have a group of people like this that get together, that talk about the markets, that try to understand the markets. And that's, I think, the draw of it. It's very hard to get your head around the market in all of its aspects. So maybe if one guy focuses on, let's say, on the debt market, while another guy is focusing on the equity market, while another guy is focusing on, let's see, the crypto space, and you guys all can get together and put, okay, this is what I've done. This is my research here. And you guys can all, make better decisions, because that's what it's all about. Making the good decisions over a long period of time in investing in the market or in cryptos or in any space of this market. That's what it's all about. Many people, and you guys probably know about these kind of people, like, they expect to buy an asset and it's just going to go up. No, it can go down. It can go down a lot first. And then, you reevaluate it. And if you're investing in the position, it's different than trading it. I mean, I do everything. I do all things. I consider myself an investor. I consider myself a trader. I consider myself a speculator. And I'm in a lot of different things. I'm not just in one. And I think that's also kind of important, is to have exposure to a lot of different kinds of assets. I got classic cars. I got musical instruments. I got artwork, real estate. I own stock. Obviously trading derivatives. I own gold and silver and cryptos. That's a lot of stuff. But that's how you got to be kind of spread out. I think, at least, and it does take some capital to do that. And no one has to start off like that. I did not start off like that. I started off really just trading equities. That's really what I did. And once I was able to earn some cash doing that, say, okay, you know what? Now I got this amount of cash. What do I want to do? Let's venture out. Let's start looking at other things. So you got to start small, and then you just, work it from there.
So thank you for that, that whole piece. That was some great insight into you as, Greg. So asking a more specific question, you put great emphasis on watching the 10-year yield, the dollar, and oil when analyzing the markets overall. So for our newer members, could you explain why those 3 are so important and why you put so much emphasis on it, and kind of just carve out the reasoning behind those 3 especially?
100%. I really don't even, we are going to know, or I'm going to know pretty much what the stock market is going to do just by looking at those 3 things. I mean, look there first. Everyone's got their eyes on this damn stock market. If we understand that the stock market is a derivative or derives value from what these other things are doing, well, that's the key here. The 10-year yield, the benchmark, as I think you guys are aware of, is the one that everybody watches. I mean, people should be watching the whole yield curve, but it's the 10-year yield that is the key. Now, how does it work? All right. If you see, for example, and I'm just going to put this down basically here so people can just understand the basics of it. If you see the 10-year yield drop, what does that tell us? That tells us that cash is coming from somewhere and going into the debt market. 10-year yield drops. If you see the 10-year yield rise, that means cash is leaving the debt market. It's looking for somewhere to go. Generally, when you see the 10-year yield rise and cash is leaving, it's looking to get into equities. Now, if you see, for example, 10-year yield rising or staying stable. Now, let me just put a little caveat in here. The 10-year yield can't move. If you see dramatic moves in the 10-year yield, that's when you got to kind of maybe sit back a little bit and digest what's going on here, because I do believe at one point we're going to get a massive sell-off in the debt market. And we're not there yet, but we're going to see a spike in the 10-year yield, which I think is going to make people's heads spin around how fast it's going to occur. But barring that, I'm just talking generalities here. So if you see the 10-year yield rise, cash is coming out of the debt market, is looking for places to go, more than likely it's going to go into the stock market. Okay, There's number one. Number two, crude oil. Crude oil is the lifeblood of the market. It's the lifeblood of the market. The entire energy sector is dependent on it. The financial sector is dependent on it. So if you see, now let's set this up. You got the 10-year yield rising or staying stable. Okay. You got crude oil getting bid higher. That's a nice setup for the market. Then you want to look over at the dollar. What's the dollar doing? Is the dollar stronger? Is the dollar weaker? The market, as we all know, likes a weak dollar. So if we got that setup here, we got a dollar that's weak or under a little bit of pressure, or maybe staying flat. We got crude oil getting bid higher, and we got the 10-year yield stable or moving up. Where do you want to put your money? I mean, it's a no-brainer. It's a no-brainer. You want to put your cash in the stock market, period. Or obviously other assets too, but we're talking about stocks here, or a derivative or something along those lines, or start looking to be long. So it's really simple. It's really simple to me to just, I try to break things down very simply for people because it's confusing to them. Oh my goodness, a 10-year yield. What does that mean? Oh my goodness, the dollar, what is that doing? Who cares? If we just can keep track of these things and understand the dynamics, just realize what's happening. 10-year yield dropping is fear, generally. Fear. Cash is going into the debt market seeking safety. You got to be insane, but that's the way it works. Okay. And that's really how I gauge the market. Then I'll look over at the market. Let's say, for example, stock futures are higher. Stock futures are up triple digits. Dow's going to open up 200 points to the good. Okay, that's all well, that's lovely, isn't it? Now I want to see, all right, now what's the 10-year yield doing? Is it stable? Is it down or up? Okay, it's going down a little bit. That's interesting. Dollar's a little stronger and crude's not doing anything. Guess what? More than likely that 200 point open to the good in the Dow is probably going to go away. So if you want to, at that point, it depends how crazy you want to get. You want to start, maybe you want to, do a day trade and bet against it, bet against the Dow or something along those lines. But I don't do that. That's what I used to do. I don't do that anymore because it drove me out of my mind. And I'm frankly getting too old. I'm getting too damn old to do it. So I'm taking the easier route, but that's really what it is. You got to understand, and I know everyone gets fixated on looking at the stock market. Well, why? Why are we looking at the stock market when we should be looking at where the market derives value from? And that is, well, the debt market being the largest aspect of the entire market. And that's why you got to watch that 10-year yield, and then crude oil, and then the dollar. And then what the Federal Reserve's balance sheet's doing, and it's hyper ballooning, and that's going to continue till kingdom come. So that's what I've been telling people: stay long the market, stay long the market.
Yeah. So with that, just to follow up, you talk about a pop in the 10-year. What do you imagine that how big is that pop in the 10-year?
But I think it's going to be really big. I think we're going to start to okay, we're way away from this right now. But the fact of the matter is, there's a hyper bubble in the debt market. It's a freaking hyper bubble. It's a monster. It's a Frankenstein monster. And in order to keep this going, cash needs to be created out of thin air, borrowed into existence in greater and greater amounts. At one point, it's going to become too much. Now, I don't think this is going to be by accident at all. I really do believe that we're going to see a debt market implosion at one point, meaning you're going to see a massive sell-off in the debt market. Who in their right mind, maybe you guys can explain this to me while I'm here, who in their right mind would want to hold a treasury bond? No, exactly. Shake your head. Nobody would want to hold it. You got to be out of your mind because you're guaranteed to lose money. And what kind of an imbecile, really, honestly, let's call these people what they are. What kind of an imbecile would want to hold an instrument like that they're guaranteed to lose money? That would not be me. Sorry. So, that's going to implode at one point. Don't know when. I don't even care when. I don't care when. All I care about is guys like you and me to be on the right side of this market when it happens. Right now, just talking to you guys pre-market, you guys are in all the right spots. And I'd like to hope I have something to do with that. Because if you've been following my work, I've kept you there. I've kept you on the right side. Well, there's all these other guys saying this and saying that, and they're all being wrong over and over. And they're going to be wrong because I don't know what they're doing. Maybe they're doing too much crack or something. They're not looking in the right spots. They're speculating, I think this is going to happen. Well, tell me, sir, why do you think that's going to happen? Tell me where are you getting this information from? I don't know. I don't know. It's crazy, but that's just the way it's going.
Yeah. And
but,
go
We're going to get this implosion in the debt market at one point. And it's just simple to understand. When this occurs, you're going to see a spike in the bond yields. And what's that going to do? That's going to put pressure on the stock market, which will sell off. And as we all know, cash doesn't go to money heaven. It's just going to simply move. It's going to move into other assets. I think it's going into commodities. I think it's going into cryptocurrencies as well. So these are the spots where we gotta look at the market, take advantage of what's happening right now. Okay, we trade the market we have. That's what we do. I've said this a gazillion times in my own blog. So you trade the market you have. Of course, you think down the line about what's going to happen, but don't sweat about it. You, again, evaluate what's going on in the here and now. And at the same time, you're looking for what things are going to do in the future with regard to suppressed assets. And I think we have a whole spectrum of asset classes that are suppressed, cryptos being in there as well. Because I believe when we think about it, guys, when we get this, when the debt market sells off, and it will at one point, putting pressure on the stock market, where's this cash going to go? It's going to look for places to go. And people are going to be clamoring to get out the door. And not everyone's going to get out the door at the same time. People, you see, look, what people don't understand is, oh, well, I'll get out of the market in time. Well, maybe you won't. Because you're going to have to, people, when markets sell off precipitously, and let's say you go in there and you put a limit order in to sell whatever you got, and there's no buyers, what are you going to do? You're going to mark that price down. And then there's no buyers there. What are you going to do? You're going to mark it down again. You're going to keep lowering, lower. And everyone's going to be running for the door at the same time. So you got to be ready, but again, we already know what to look for. We know we got to keep our eye on the debt market because that's the monster that's inflating everything else. The debt market is where it's at. And the debt market is where it's going to start. Look, are we going to get drops in this market? 1,000 points in the Dow? Maybe, of course. Maybe more than that? Yeah. But is that the big one? It won't be the big one until the debt market melts down. And this market is so overdue for a pullback, a real one, or a correction. It's frankly beyond belief. I mean, we've gone up for what, 7 months now with regard to most of the indices. They're unstoppable. We haven't had one down month. Really? That's not normal. So anyway, I know that a lot of people, maybe even watching this video, are waiting for that market crash. And some people even want it to happen. Well, what are you doing about it? Are you sitting back doing nothing? Are you just sitting there waiting? Are you sitting there praying that it's going to crash? I mean, what are they doing? I don't know. I don't know why people are letting these opportunities pass them by. It drives me nuts. For example, I know I'm talking a lot, but let me throw this out here. When cryptos took that big hit, you guys saw my work. I sat back and I was like, good, let it fall. I don't care. And I was saying, buy the dip, everybody. Buy the dip. It's going up. And what's happened? We've had this screaming rebound in cryptos. And if you were smart enough to listen to what I said, or after thinking about it yourself, you did pretty well. You did pretty damn well. As most of you guys knows, I told people to start buying Bitcoin at 3,000. What are we at? 46,000. I think that was a good call. And I'm telling people I think it's going much higher. I really, really do. With regard to gold and silver, these are long-term plays. We know who's rigging the market. It's in our face. Take advantage of it. It's everywhere. I mean, anyway, that's my take on those.
So I was just, that's super valuable information. And how did you learn all this? How were you able to figure out about the debt market, oil, the dollar?
Well, the truth of the matter is I talk to everybody. I know guys at most of the big banks. And I make jokes about it. I know you're watching my video because I know they are. I can't talk about who these people are because they'll probably get in trouble. But I know the guys at the biggest banks on Wall Street. We talk all the time. And, I know what they're looking at. Okay, you see this is going on here and that's going on over there. So, so I think I would say I'm kind of in with the in crowd people over there. And, a lot of people say to me, oh, Greg, you must have inside information because your calls are too good generally. And I don't have any inside information, but people talk. People talk about the market just like we're talking here. Okay. So you assimilate this stuff. You talk to these people, you try to understand what's going on here. Look, I already did that whole thing, but blatantly, when I was a kid working over at Bear. No one feeds me any kind of information that that isn't generally known to the public. And I spew it all out right on my blog anyway, because I want everyone to win. I don't want anyone to lose. It's really the truth. Even the people that don't like me for whatever reason, maybe they can't handle it, because I'm honestly, look, my track record is pretty frightening. It scares me sometimes. Am I right all the time? No. Am I right most of the time? Yeah. And it's usually, if I'm right pretty damn big. And if I'm wrong, I'm only wrong small. So it's a good spot to be in, but that's really the truth. Look, you learn things from other people. You don't pick this stuff up in like business school or anything else. I'll tell you what has helped me understand things. Like when I studied human anatomy and physiology, okay, there's no other thing more complicated than a living organism. It's really the truth. And if you can understand the dynamics of that, you can pretty much understand anything. And the markets to me are simple because it's a cause and effect. It's, if this is happening, then you should expect this to happen too. Now, nothing is written in stone, even in medicine. That's why it's called practicing, right? So, you take in these generalities, like we were talking about before with regard to 10-year yield, crude oil, and the dollar. And you will see that most of the time, maybe 80% or better, it's going to work that way in your favor. If we understand what's happening around us right now, that is central banks buying all the debt, they're issuing debt through one door, buying it back through another door. They got this mechanism where they're funneling dollars around the world. People aren't supposed to know that's going on, but it is, okay? You got central banks buying assets with dollars. I mean, they're buying assets with dollars, not their own currency. It's an unbelievable thing. The Fed is in some kind of mission here to dollarize the world, inflate. I've been telling people for the long, since the Fed's balance sheet was like maybe 4 trillion. I said it's going much higher. We're like at 8.5 trillion. Everyone said, oh, it's never going to make it there. I think the Fed's balance sheet is going to go twice what we're seeing here, and in a relatively short period of time, it has to. And then when they're ready, they're gonna let this thing go, and that's going to be the grand finale. Because right now, what are we in? We're in the greatest transfer of wealth the world has ever seen. The middle class is getting fleeced, suppressed rates robbing them blind, only to pump the stock market higher. And what are we doing? What are we doing? You, me, people that are watching this, we're just riding the wave. That's all we're doing. We understand what's happening. So if we understand what's happening, we can take advantage of it. And that's all I want to do. That's all I want people to do. Say, and like I said earlier, I want people to hear this stuff, understand it, do their own research, and then take action. And it takes guts, definitely, to take action, but never play with scared money. If you're playing with money you can't afford to lose, you're going to lose it. That's really the truth. If you play with scared money, you're never going to make money in the market. You can't think of like, I mean, you have to have capital. Let's be honest with each other. In order to play the market or get involved in anything, you have to have some kind of funding or ability to fund your account. You can't just have nothing. And that's kind of sad too, but unfortunately that's the way the world works. So never play with scared money. That's another big rule. Like I always, I played with scared money when I was many, many years ago, when I was starting out and I was really didn't know what to do. See, no one's going to tell you this stuff. And going back to how I learned about this, no one is going to come out here and tell you this kind of information. You have to find it out for yourself or talk to someone who will be willing to explain it to you. This is the whole big secret of the financial markets is no one wants to, let the cat out of the bag, tell the secrets of how the market runs. But that's exactly what I do. I'm trying to tell people what's happening, why it's happening, and what they can do about it. So getting in with a group of people like you have right here is key. You guys talk to each other, make friends, try to, go on, like, for example, Twitter, and you can just maybe try to make friends with people who work at the big banks. A lot of them will talk to you, make friends with these people, schmooze these kind of people. And you might be surprised at what you'll learn, or maybe some information that you might get too. Look, it's a game. Life is a game. Okay. And it's really who plays it the best who's going to win. That's really the truth here. That's really what I think. I think that's all important stuff I'm saying right here. But did I answer your question? I think possibly.
Yeah. No, that was awesome. And kind of following up on that, since we're talking about understanding.
We had one question in the comment. So it says, You mentioned money moving to suppressed asset classes like crypto and commodities. Do you see real estate as one of those classes, or do you think that market space has its own issues with overvaluation? Also, based on your experience and knowledge, how does a debt market implosion affect real estate and real estate development moving forward?
Yeah, that, I'll be honest, this is something that has perplexed me for a while. Let's set this up real quick. So what's happening here? In my view, we've been moving towards a society, a two-tier society, or a new feudal system for quite a long time. Extreme haves and extreme have-nots. Middle class is being eradicated. Real estate is definitely out of the ability for most people to buy at this point. Like a home, an average home is beyond the price of the average person to buy it. When any asset, in my view, and this is how I look at bubbles, okay? Now, I want to add a caveat to this too. But when any asset moves above the ability of the average guy to buy it at its average price, then you have a bubble. So you could say right now that housing is in a bubble being inflated in the back of suppressed rates in the debt market. However, you have to say, since we are in this transitory phase into a new society of extreme haves and extreme have-nots, what does that mean? I think if rates start to spike, it's going to put pressure on real estate, but is it going to last? I don't know. I think real estate, is very highly priced right now. More than likely, going on what I just said about a bubble, it appears to be in a bubble at this time. Definitely out of the reach of the average person making an average salary to buy an average price home. So that's how I would gauge that. But it is a perplexing question. How is real estate going to perform? Because people do need places to live. I don't know really if we're going to end up in the same issue. It's a different animal now. Actually, that's not really true either, because you have the whole, right now you got the Federal Reserve buying at least $40 billion a month in mortgage-backed securities. Obviously, this is adding artificial demand. So the price action is distorted. Whether it's going to crash on an epic scale like we saw last time, I think remains to be seen how it's going to play out. I really don't think that we're going to see a massive influx into real estate when the debt market implodes on us, and it's going to. I think it's going to flow into like water. Water tends to flow down to its lowest point first. It'll fill up this tributary, then maybe the next tributary. So it's going to go into the most suppressed assets first. And in my view, that is a lot of the commodities, especially gold, silver, especially. And I think cryptos have the potential to actually go parabolic. I really would not be surprised to see, I don't even want to say it, Bitcoin go exponentially higher than it is right now. I'm not going to put a number on it, but I would say exponentially higher than it is right now, multiples higher than what we have today. I would not be surprised to see that. So I think that real estate is right now, based on how I described the bubble, I think it is in a bubble. And I'm not really sure how bad it's going to take a hit. At one point, I think it is going to take a hit. I don't know how bad it's going to be, though. I think the worst is going to be the equity market. I think the equity market is a hyper bubble. At this point, nothing makes sense anymore. The worse the economic news is, the higher the market goes, because it knows the Fed's going to keep its foot to the floor. That's a very interesting dynamic. But it's been going on for a long time. And so you can only understand basically how bad that bubble is. So it's going to, all I can say with real estate is it's going to be interesting, and I do think it's overvalued right now. But is buying a home better than renting? Yeah, it is. I don't want to be, and rents are just, frankly, I'm going to say it, they're retarded. They're retarded. The price of rent is astronomical at this particular time. So, why do you want to pay for someone else's, future when you can invest in your own? But I think most people don't even have the money for a down payment. People are coming up short with that. People are really suffering today. And I hate that. I really, really do. I want people to, have things that they want in abundance. I really do. And I think it's achievable if people understand the situation, try to take advantage of it, cut back on the nonsense, things that they don't really need, try to get themselves out of debt, especially if they have unsecured debts. Is the most simple thing in the world to get yourself out of unsecured debt. In fact, I wrote a book on it. I do a whole video on it that walks you through step by step how to get yourself out of being an indentured servant owing money to people. And I'm not talking about secured debt like to a house, but if you have unsecured debt like a loan or like a credit card, you can get out from under it in the blink of an eye. You just renegotiate it. It's not that hard to do. Banks do it, corporations do it. They renegotiate their debt every day. So why can't people do it? Of course they can. It's no secret, but they want you to think you can't do it. But anyway, did I answer the question? I know I'm going off here.
Yeah, I think, yeah, you answered it.
We have just another question.
Hopefully we have time for one more, but when I first started following you personally, I liked the quant models that you were making, the technical analysis models. I was playing around with them for day trading. I added some of my own techniques to it, and it ended up being pretty profitable venture for a little bit until I just got, the volatility got decreased a little bit, and it was a little bit harder at that point, using the momentum strategies. But given that, how do you see and how do you use technical analysis? Maybe you probably used it more when you're doing swing trades, but how have you used it in your trading career?
Oh my God, it dominated my trading career. I was obsessed with it. I mean, beyond the point, like you can't even believe. I wrote different programs and played with different charting systems, and I believe sincerely in technical analysis. The interesting thing about technical analysis is this: you could have two guys sitting next to each other, both of them, let's say, experienced traders, and they're both looking at a technical chart and both see something different. And I mean, they could be using the same thing and get a different outcome. Okay, that's, I think, kind of interesting. Everyone interprets data differently, I think. So, and I think that's great that you were using, a system and putting your own little things in it, because that's what you have to do. No one can just, people have sent me their work over the years. Okay, Greg, look at this chart. What would you say? And I'll look at it and I'll give them a totally different answer than they were expecting. Doesn't mean I'm right. Doesn't mean I'm right. That's just how I was interpreting it. So it's tricky to interpret it. But look, in this environment, I think what people really should be, if you're going to look at indicators here, I think standard deviation is a really good one to be looking at. People should be looking at like anything that goes beyond, let's say, 1.5 standard deviations away from the mean is on the upside is probably a sell. On downside is probably a buy. If you want to just break it down to that, I really I liked trading standard deviations for a long time. I think from a swing trading standpoint, or even longer term trading standpoint, or investing, looking at standard deviations is probably a really good way to gauge it. I've been using standard deviation now. Like I own stock in certain companies, and I'll like add to positions when I see it drop below, let's say a drop away like 1%, one standard deviation or two, I'd be laughing and loving it. I'd buy a lot more of it. So, look, technical analysis, I love it. I became obsessed with it for the longest time. You really can. I think people can become obsessed with technical analysis. And that's really what really got me interested in this fact, the technical analysis. That gentleman, Steve, that I was telling you about, I don't know if I mentioned his name. He was the guy that I met at Bear who really kind of helped me out. He was the guy that showed me technical analysis. I was supposed to be some kind of analyst. I never even got to that point, really, honestly. All I did was just work for a guy who was an analyst, and he didn't teach me nothing at all. Oh, blah, blah, blah. It's just bullshit. So anyway, so this guy, Steve, he was the guy who set me on the pathway with technical analysis, and I was fascinated with it. And it is an amazing thing, and you can get a lot of information out of technical analysis. There's no doubt about it. But with the volatility and stuff, you gotta pull cash out of these positions when you make it, and hopefully if you read these things correctly, 7 out of 10 times you'll get it right. minimize your losses. And that's the key. The key to trading is trying to stay on the right side, obviously, as much as you possibly can. And look, we all do this. I've done it too. You look at a position, it goes against you. Okay. And you're like, well, you know what? It's going to turn around. And guess what? It doesn't. It gets worse for you. And you're looking at the chart. The chart's saying to you, technical chart, oh, this is going to turn around tomorrow. And it doesn't. And that's what gets people in trouble. It gets a lot of traders in trouble. Trying to say, it's hard sometimes to admit maybe you were wrong on a trade, but the sooner you admit you were wrong on that trade, and the sooner you get out of it when it goes against you, the better off you're going to be. And so what if it goes up the next day? Doesn't matter. You cut those losses, you reevaluate, you reevaluate your position, and you reallocate cash into a new position. That's how you do it. You just keep rolling it. You're rolling it. You're rolling it. You're rolling it. That's what you're doing.
Right on. Yes. Yeah. I mean, the way we kind of do technical analysis, we like price patterns. So we just trade it statistically. There's this guy, Thomas Bulkowski, who did like a lot of research on, how often the patterns play out, how often do they reach the price target. So, as long as you get the right risk to
Oh,
reward.
I love that. Patterns are great.
Works out.
Patterns are great too. But again, it's the same kind of thing. You look at a pattern, you look at a rising wedge. I don't know, for example, and okay, this, you know what, this stock is going to sell off, so I'm going to start shorting. And guess what? It doesn't reverse longer. And now you're in a position where, you got time decay eating at it, and you can get yourself in trouble with that. You can make it look. You can make a lot of money doing this stuff too. You can lose a lot of money. The key is to not allow yourself to lose that. Take a small loss and get out. That's how you should.
100%.
All right. I think we got one more question, James. You got one more question, then we'll leave you to it.
You wanted me to ask the one? Oh, okay. Yeah, over here. What is how many positions do you like to have open at a given time, and how much buying power do you like as a percentage?
I will do that. Sorry, Greg, if you could just answer that quickly, and then we have one last question about crypto.
I didn't get to hear the question to it. Say it again.
How many positions do you like to have open at a time, and how much buying power as a percentage of your account do you like to allocate to those positions?
I like to be fully invested. I like to be fully invested all the time. I don't want to have cash sitting around. You got to be nuts. Honestly, right now, out of my entire portfolio, I have about 90, and I'm not joking, about 99% of it invested. 99. I don't like to have cash doing nothing. It's the worst thing in the world. I hate seeing that. Cash available to trade. I don't know, $5,000. Why do I have that $5,000 in there? I don't want it doing nothing. What are they going to do? Smile at me? No. I want to put that money to work. So I want to be fully invested all the time. That's really the truth. So I'm going to open up as many positions as I need to allow that to happen. I don't understand. I know a lot of people. No. Why would you? Look? If you're in the market, you're in the market. If you're going to trade the market, you're going to trade the market. You're not going to be. I don't like sitting in cash positions. I hate sitting in cash positions because it doesn't do anything. It's not making me any money. I'd rather put that money into a high yield account and just watch it. If I have to. But if the money is in my trading account, it's going to work. Period. Awesome. Did that answer the question?
Yes.
Yeah.
Okay.
Thomas, you want to take?
I'll take the last one. Yeah. So a lot of us here at PK are obviously huge bulls in the crypto market. We've been again in cryptocurrency, whether for years or just starting out now. And we were interested in, obviously, we know your take on crypto. You're an extreme bull, as we are. But what are some of your favorite positions? So what are some of your favorite positions, if you could,
all the big ones. I love all the big ones. I love all the big ones. I have a significant amount in Bitcoin, Litecoin, Ethereum. Oh my God, man. I own a whole bunch of them. I can't even remember them all. Probably most of them. I even own Doge now, a Dash. So I'm in a bunch of them. I'm in a whole bunch of them. And I look, I always watch Bitcoin. Bitcoin is the granddaddy of them all. And the other ones seem to follow Bitcoin around. Obviously, Bitcoin was the first one I was exposed to many, many years ago. I wish I was smart enough to buy it many, many, many years ago, but I wasn't at the time. Look, when I first got introduced to crypto, I didn't know what to make of it. I'm an old school guy, so I really had a hard time kind of I turn like an aircraft carrier. I don't make decisions like this real quick. I got to study things. And at first I wasn't happy about it. I was like, I don't really understand this. So I'm going to forget about it. That's why I was definitely late to the game. But anyway, as you all know, I love this stuff. I want to keep acquiring more. I bought a lot more during this dip here. I probably doubled my entire crypto portfolio in just the last, I don't know, maybe month. I've been buying like crazy, and I look, is it risky? Sure it is, but at the same time, I see value. I see value there, and I can't even help myself. So when I see that, I just jump on it. And if I'm wrong, guess what? I'm wrong. Oh well, I can live with it. You never play with scared money, like I said.
Awesome. Cool. Well, that's all we have. Again, thank you so much for your time. Our members definitely had a great time. Everyone's been watching you for quite some time.
I really enjoyed this. It was really pretty cool. I hope we all learned something. I learned something from you guys. I see a bunch of young guys here who are acting, taking action, young men of action. Bravo to you. I love it. And I hope we get to do this again.
Thank you. Thanks
And
again.
for anyone who doesn't follow Greg, he posts twice a day on YouTube at Greg Mannarino. Analysis at the beginning and the end of every day and going into the week. So thank you again, Greg.
Thank you, guys.
Thank you so much, Greg. Appreciate you coming on here.
Have a great evening, Greg.
You too. Bye-bye now.